We trust you had a relaxing tea break. Did you? Okay. While the chai chime chatter may have been lively, what's ahead is even more thought provoking and future ready. As we step into this interactive session, I'm reminded of Warren Buffett's words. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Today is about recognizing where that gold is falling and how to seize it with clarity, strategy, and calculated risk. So let's stay alert and open to the valuable insights coming our way. In today's interconnected world, capital knows no boundaries. Whether it's emerging markets in Asia or developed economies in the West, the global capital market offers immense opportunities for investors who are willing to look beyond their home country. From equities and bonds to ETFs and global funds, the global investment arena is vast and ever evolving. But how do we identify these opportunities? What trends are shaping the international investment landscape? And how can we, as future chartered accountants, play a role in guiding capital in the right direction? To lead us through this crucial conversation, we are honored to welcome Mr. Ambareesh Baliga, a renowned expert in global finance and capital markets. Please give a big round of applause to our guest. May I request CA Chandrakant Rao to kindly escort Mr. Ambareesh Baliga to the dais. It's my honor to introduce our esteemed guest, Mr. Ambareesh Baliga. He brings with him over 4 decades of rich and diverse experience across various facets of the market. Sir has been acknowledged for his acumen and understanding of the stock markets. A cost accountant by qualification, Sir began his financial journey with Pricewaterhouse in Kolkata. Since then, Sir has worked with reputed firms including Kotak, Karvy, Way to Health, and Edelweiss, and has headed businesses in segments such as wealth management, fund management, corporate advisory, investment banking, retail finance, and stockbroking. Renowned for his sharp market insights and deep understanding of the equity space, Sir is a respected voice in the industry. His expert opinions are frequently featured in leading national and international publications. He is a regular contributor to Outlook Business and Business Standard and is often seen sharing his perspectives on prominent television platforms such as CNBC, CNBC Awaaz, NDTV Profit, Vion, Doordarshan, Jagran Business, News 9, and Zee Business. Currently, he serves as an independent strategy advisor to few mid-sized corporates and is an independent director on the board of Pentomath Capital Advisors Private Limited, one of the fastest growing merchant bankers in the mid-market segment. He is also on the board of Asit C. Mehta Financial Services Limited. In addition to advising a select group of ultra-high net worth individuals and family offices, Sir offers a subscription-based equity advisory services titled Game Changers on money control aimed at long-term wealth generation. He contributes to the Money Control Super Pro platform and manages model portfolios on small cases which have delivered impressive returns of over 30% CAGR since their inception 4 years ago. On behalf of Mangaluru branch of Sikasa of ICI, I extend a warm welcome to you, sir. May I request CA Chandrakant Rao to present a sapling to our distinguished guest as a token of our regard. session is designed to be interactive, so feel free to engage, ask questions, and absorb as much as you can. I now request Mr. Ambareesh Baliga to take over.
Good afternoon, and I would like to thank the management committee for inviting me for this function. And it's always a pleasure to interact with young minds like all of you, who in fact are the future of India. You may be expecting me to talk on the future of the stock markets in India and why one should be investing in the various sectors which are looking good right now for long term, and possibly the stocks which one should be buying. So generally in market parlance, we call it tips, because that's what most of the people ask me, kya lena chahiye? But I'm not going to be talking about any of these today. Instead, I'll be covering my journey in the stock markets since the last 40 years plus, and what I've learned or gathered from my experience, so that all of you have some takeaways from this talk, which in fact could last you a lifetime. This is not working. Yeah. So 1990s to the first decade of 2000, that belonged to my generation. In fact, we were in our 20s and 30s, and it was a really exciting time for the young generation of that era. The big reforms had just taken place, which was opening up the economy. We saw wealth creation opportunities, and basically for the general public, which our parents and grandparents, they never could dream of creating that sort of wealth. People saw salaries growing multifold. In fact, my salary in those 20 years went 500x, not 10, 15, 20x, 500x. However, the last decade, which is 2000 to 2019, was a bit of a washout. We initially saw a lot of scams, upheaval in the economy. Then we had the new government coming in 2014, which again had a lot of promise, but surely it took a while for them to put everything in place. But now we are in the middle of the third decade of the 21st century, and we have a lot of hope. And many of us believe that this, in fact, could be the golden period of India. And who would actually benefit the most out of it? It's basically all of you who will be the drivers of this economy over the next couple of decades. So the academic performance is important. It gives you the head start, opens up a lot of opportunities, but not everybody sitting in this hall is a topper. Many of us would be somewhere possibly in the middle as far as the academic performance goes. In fact, we are considered mediocre, and there's nothing wrong in that. I was also a very mediocre student. But remember that there are some qualities which go beyond academic performance, which is required to excel in life. And excel in life does not mean only money. It's being happy and satisfied. At the same time, you should be able to contribute to improve the society you live in. It's slow, it's fine. Done. So basically, keep it simple. Keep your life simple. Don't complicate your lives. Your generation, just some time back we talked about social media taxation and all that. So your generation is too busy in this wired world. stressed out most of the time. You use your smartphone possibly more than 100 times in a day, spending anywhere between 4 to 6 hours on your phone. And your mood depends on the sort of emojis which you receive. It depends on the sort of likes which you get. But we as humans are actually wired to manage possibly 150 to 200 relationships at any point of time. But with the social media, I mean, this number has exploded. But our brain capacity remains the same. And that's the reason I think most of us feel that stress because of social media. I'm not suggesting that we should throw away the phone, but we need to maintain a balance somewhere between the real world and the wired world. Because of this, I think it will give you enough time to explore and enjoy life, leaves you with enough mental and emotional bandwidth to spend quality time with those around you. Now, I've been practicing this for the last 10 to 15 years, and I see that I'm at more peace with myself. And even in investments, I mean, what I tell people is keep it simple. Investments are not complicated. It completely is the way you look at it. So don't chase that 1% extra, which will take away much more of your time and your bandwidth. It's not really worth it. So everything comes at a cost. So I'll pick and choose a few incidents from my life and give you those as pointers. I really hope it helps. Going back to the 1980s, I mean, I just got into the college. This was about 1983-84, and the IPO bug, in fact, hit me. A lot of IPOs are coming, very profitable when it got listed. So the next few years, I was too busy playing the stock markets. I got tied down with the daily excitement, I mean, the sort of fluctuations and volatility which is there in the markets. And I was also running a stock broking business on the side as a sub-broker. I mean, just like every other ambitious BCom guy, I mean, I also enrolled for CA. I did my articleship, but unfortunately, I didn't pass the exams. So I'm not a CA, I'm a cost accountant. I managed to do that. But do I regret it? So initially, yes, I should regret. Because as a chartered accountant, I would have possibly had a head start in my career. But later on, I mean, I realized it doesn't make any sense in regretting. So you should not regret whatever has happened. I think instead you should learn and move on, because every day is a new opportunity. Never, in fact, like I said, never regret a lost opportunity and learn from it. Because regretting means wasting time, brooding over something which you cannot change. It's happened already. You can't change that. So instead, have some takeaways in terms of learning from your mistakes. And my major takeaway from my CA exams episode was to get my priorities right. It's important to have priorities right in life, and you need to be clear as to what you want to do. So you should not waste time doing something you don't want to do or don't enjoy doing. I think that's more important. So though my priority should have been studying for my exams, but somewhere my priorities involuntarily shifted to investments and broking. So if my priorities were set right then, I surely would not have been fooling myself and my parents for those 3-4 years. So the experience which you get, I mean, this is what you get, this is the experience which you get when you didn't get what you wanted. So, like I said, I gained this experience by losing those 3-4 years. So for each of you who are here today, I'm sure the priority number one would be to complete your course. But if this is not priority number one, like I said, don't fool yourselves. Today's environment offers various career opportunities which you can explore and excel in. But remember that whatever you do, ensure that's your priority number one. In fact, I wanted to make a career in the stock markets, but in those early 90s, it was a very, very closed sort of a circuit. I was an outsider, and at best, I could become a client of a broker. I couldn't even join a broker at that point of time because they would only take people from their immediate surroundings, family, and relatives. But fortunately for me, the markets opened up, the economy opened up in the early 90s, especially after the Indian financial crisis with Manmohan Singh becoming the finance minister. So the markets then were discovered as a decent sort of a occupation for professionals in the early 90s. And I would say, I had this, you normally say it's a stroke of luck, that Kotak Mahindra Bank, which you know as of now, started off as a small NBFC. And they were setting up shop in Calcutta. That was, if I'm not wrong, that was the third branch of Kotak. We're just about, I think they had 70, 80 people. And Uday Kotak was delighted with my knowledge of the markets in those days and offered me a job to manage the Calcutta office. So I could say that I was in the right place at the right time. Is that called luck? No. Luck is indeed when preparation meets opportunity. And my qualification gave me the interview call. But I clinched the job because the knowledge I acquired on the stock markets by then. By then I was about 8, 9 years in the markets. Then from Kolkata, I shifted to Mumbai to set up the portfolio management desk for Kotak. That was somewhere in the mid-1990s. And Mumbai was the place to be in. But moving from Kolkata to Mumbai was a complete change of culture. I had to unlearn and relearn. So this brings me to another important question. What is the world's most valuable commodity? Oil. Any oil prices have started moving up. Gold has already crossed 1 lakh rupees. Platinum, or money overall. I think everyone wants money. But unfortunately, none of these are the most valuable commodity. The most valuable commodity is time. See, for any individual, this is the only commodity which is limited. And we need to use it wisely, efficiently, and effectively. So, whatever I do, especially when it relates to business, I ensure that my time is efficiently and effectively spent. And including this talk, which I'm giving you. What's my benefit out here? My benefit is interacting with young mind like yours. And there is very much a possibility that I may pick up something new. There are a lot of times I get ideas from people like you. And secondly, I think all of you are the future of India. Next 10, 20 years, I hope most of you are successful in your life. And if this talk touches a few of you and makes you a better person, then I would say this time what I'm spending right now has been effectively used, because somewhere you'll remember me. Other thing is, listen. Anyway, let it be. Listen to others, because even today, like I said, I keep learning mostly from listening to others. Because some of the best investment ideas which I've got is by listening to others, not by data mining. Though post that, I do a lot of work, go through the data, do research. But the initial idea comes when I'm patiently listening to people. So in life, it's always important to network. It actually helps you immensely in your work because a number of times one need not reinvent the wheel. The better networked you are, there's a higher probability of you doing better in your career. So today, again, like I said, I'm here to network for the future. And now again, coming back to the topic of time. In business, there are two important inputs. One is money, and the other is time. So when you get into your career mode, you will be meeting various people internally as well as externally. When I say internally in your office, externally could be your clients. So for any meeting which you go for, always ask yourself, what is the value add I'm doing to the person I'm meeting? And what is the value add I expect from the person I'm meeting? Because it has to be both ways, it can't be one way. Otherwise, what will happen is it will end up as a tea and coffee meeting, you'll exchange pleasantries, and that's it. Going ahead, the person may not even want to meet you. Now, coming to Kotak, after about spending 10 years in Kotak, I was among those who felt that my career was not really going anywhere. And this was the time when you must have heard of the Ketan Parekh scam in 1999-2000. So at the turn of the century, the stock market is also in a very bearish mode. Most of the broking broking firms were facing difficult times. But having spent 10 years, my job was secured. But like I said, it wasn't really giving me satisfaction. And I had a choice. Stick around for the salary and security or look for better opportunity. So that brings me to a situation where you have nothing to lose. Because sometimes making a choice becomes difficult, but when you are in a situation of nothing to lose, it becomes so much easier. So, this is a position where you can actually take bold decisions. Because you may think that it's a bad situation to be in, but I feel sometimes it's the best situation to be in, because you would take a decision you would otherwise hesitate to take. So the decision led me to take up an assignment with Karvi, which now looking back possibly was my best career move which I made. I got an opportunity to create a business absolutely from scratch. And when markets started getting covered by business channels, so it was a natural extension for me. And I started expressing my views on the market. And that's how I'm here today talking to all of you. So it's been a great and fulfilling journey. Again, doing what I like doing. So now coming to my next learning, one question which we should all ponder over is, all of us have goals in life. I think, again the question is, will each and every one of you sitting in this hall get a job after passing the final exams? I hope everyone does, but the harsh reality is that some of you may not. There will be some of you who will be disappointed. So also visualize the worst case scenario. So always, irrespective of how good a student you are and how confident you are about achieving success, always have a plan B and plan C. There can be situations which are beyond your control, which could actually derail your priority number one or your plan A. Then what do? So you should not land up in a situation where you are completely lost. Don't expect to be lucky, because again, that's not in your hands. And if you're lucky, thank God and utilize the opportunity. But otherwise, have your backup plan in place. In fact, my backup plan was to be a journalist. I mean, I did start by writing articles for newspapers and magazines, and there was rejection initially, but persistency paid off. And I was covering business and markets. And that also helped me in my career. I mean, since my job also was to communicate my views, and still I write articles for magazines and newspapers. So I think I've given you enough life gyan. I don't want to talk much more on this. I'll just one or two more points. So going ahead in the next couple of years, I think most of you would be taking up responsible positions where your actions could affect certain individuals or groups, monetary or otherwise. You'll come across situations which will tempt you to cross the line for the lure of quick money. I think Satyam Computers about 15 years back, I think all of you must have heard the famous scam. We have seen so many scams in the last 2 decades. So you need to make a choice. Money is important to all of us. I mean, it provides our basic needs, good food, good house, a good car, latest accessories, vacations. But to live well, you also need a clear conscience and a good night's sleep. Money alone can't buy you that. So before you make a choice in your professional life, think about this. Don't do something which will probably provide you all the luxuries, but rob away your mental peace. I mean, in fact, all of you are fortunate to have been born in this era when opportunities are exploding. So there are n number of ways to create wealth the right way. And many have done that in the last 2 decades. I mean, there are so many success stories. And in this wired world, just remember, whatever you do, whether it's right or wrong, we are increasingly leaving trails. In addition to our conscience, there's something which can in fact come and hit back at you if you have done something wrong. So I hope each of you will choose what is good for you and your fellow citizens and make this world a better place to live in. The other thing which I would like to tell you is help others without really expecting anything in return. Because having expectations of a payback from any help which you do surely leads to disappointment and complications. So not having expectation when you help others makes your life much simpler. But again, at the same time, have high expectations from yourself, and that's ambition, to achieve the goal which you have set for yourself. And last but not the least, the definition of integrity. Doing the right thing even when no one is watching. Whether people are watching or not, if we discharge our responsibility and do the right thing always, nobody can stop our country from becoming number one in the world. In fact, Viksit Bharat can happen much before 2047. Now I'll come to the topic of investing. See, this graph which is here is a 15-year graph of Nifty. And it shows a steady move from Nifty 10,000 to Nifty 25,000, where we are currently. So typically someone who has invested 10,000 initially should have been sitting on rupees 25,000. Plain maths. But it's not that simple. You may have people who have turned that 10,000 into a couple of lakhs. And there could be some who actually lost their 10,000, sitting on zero. So, in short, there are two variables which decide which side of the fence you are. One is clearly your stock picking ability. And second and more important, your psychology, your behavior in the given circumstances. Now I bring you to the second graph. The first graph is long-term. It shows a very clear move up. The second graph is the last 1 year graph, which shows a lot of volatility. So you may have picked the best stock in the market, but when the markets fell from 26,000 Nifty to 22,000, and if you did not have confidence in the stocks or the portfolio which you had, and you have panicked and sold off, you're lost. So investor psychology, in fact, plays a major role in investments. Like I said, market is a game of psychology. So as budding chartered accountants, I think all of you should do the research yourself than depending on others. Take ideas, no doubt. There are a lot of ideas floating in the market. Take those ideas, but do the research yourself. I mean, this will give you much better understanding and confidence, because you require confidence when the markets are down. So, like I said, all you need is to have a clear mind, because when it's too jumbled up, too many complications, your investments also suffer. So, like I mentioned earlier, keep your life simple. Another style which I've developed, and that is what keeps me stable, is that I don't consider investments made in the market in terms of real money or cash. So even if there's a huge fluctuation a day, it doesn't bother me. Because when you start thinking in terms of money, you feel the amount I've lost today, I could have spent on a vacation. The amount I've lost in the last 1 month, I could have bought a car. So when you start thinking in those terms, it gets complicated. So since I've trained my brain to look at investments as figures, losses in specific investments do not really perturb me. I'm able to look at it from a more practical angle or practical standpoint. And in today's world where there is a information overload, because I started my investing career when hardly any investment was available. I couldn't even get Economic Times with quotes, which today you can get that at the click of the button. I had to wait till the evening to get the paper. So in today's world, there's information overload, and we need to find ways to filter this information so that we get only the relevant ones which we are able to process. Other thing is, I would say the fortunate ones go bankrupt initially in their investment career, because they're the ones who actually, quite a few of the people who have gone bankrupt have actually made it big, because they face failure up front and know how to remain grounded. Because in the short to medium term, you are pitted against those whose collective thought process drives the market. So those are the traders, momentum players, and not the real fundamentals. But finally, the markets have to follow fundamentals. But that time period could be long, at times decades. So investments need a lot of patience. And like what I said earlier, do not regret, learn from your lessons, because market is the only place which gives you an opportunity every day. Now, all of you must have seen this graph a number of times earlier. So you start off with a lot of optimism when you start investing in the markets. The market keeps going up. It gives you a lot of excitement. There's a thrill. And finally, you reach a level of euphoria where every day you see your investments going up 5%, 10%. And then the reality starts striking. The markets correct. Finally, there is despondency, desperation, depression. A lot of people sell out in that fall. And then you again have the next cycle starting off. So if you have done your research, if you have done your homework well, you know your investments well, at the point where most of the people are despondent, I think that's the time your confidence will help you to restructure your portfolio to buy more. Let me come to some golden rules to, just a minute. Golden rules to identify opportunities. Simply, this is what I follow. these 5-6 steps I follow to generate fresh ideas. I mean, when I look at a specific company or a sector, I just need to check out as to how big the business can grow. Because only if the sector grows, if the specific company grows, will the share price move up. If the company is not performing, the stocks don't move up. So that's what we try to check out as to in the next 5-10 years. I mean, how many X can the company grow? But if the company grows, will you be benefited or not? I mean, that depends on the sort of management which is there. So one has to look at the background of the management, look at the sort of policies which are there for the sector by the government, and surely the track record of the management. Financials, I don't think I need to tell all of you. I think all of you are experts in this. Need to check the cash flows, performance, vis-a-vis competition. The other important thing to be looked at is what is the moat for the business. Because whenever there's a big moat for any sector or a specific company, you normally see that the valuations are much higher. A company having a moat gets a much better valuation than a company which is there in a commodity business. And even in the sector, does it have a leadership position? Or can it become a leader going ahead? So if these two questions are yes, then you should be investing, because if the sector is performing well, the leader becomes the best performer. Then earnings visibility is important, and the impact of technology, because nowadays things change so fast. A company which may look good as of today may not even survive possibly in the next 4-5 years because of the change of technology. And as investors, I think this is something which you should always keep in mind. Never be married to your investments. I mean, they are there to serve a particular purpose. If you're buying something at 100, you have a target price of 150. When it reaches 150, don't get married to the company. Don't get married to the stock. At 150, if the target has been achieved, exit. Unless, otherwise, you still think, which is backed by data, that this 150 can become 200. Otherwise, exit at that point of time. Don't get attached. A lot of people make a mistake of getting attached. I had bought it 10 years back. This was my father's stock, which I got from my father. I'll keep it. But then there's a purpose for every investment. Don't forget that. Patience and perseverance and persistence. So if you have done your homework right, so whatever stock you have bought may not perform as per your expectation. But then, like I said, if you have done your homework right and things work out, in the longer run, it will pay off. So you require patience. Ability to ignore general panic. Because whenever the markets fall, there are a lot of stories which will keep coming in. Everything will be negative. It will be sort of a doomsday scenario. And again, I'll go back to the same thing, that if you've done your homework, if you've done your research, you will have the ability to ignore the panic which is there. And during those periods of the bear phase, there's a lot of pain, because you'll see red all over your portfolio. So you should have tolerance for pain. I mean, if you don't have tolerance for pain, you should not be investing. And do not get unnerved by losses. Generally have a positive attitude. Independent research should be doing. And always keep a cushion. I mean, however confident you are about the investments which you have made, always keep some amount of liquidity in your portfolio. Because there are times when very, very unexpected, the markets can crack for reasons much beyond anyone's control. And that is the time this cushion actually comes to help, because during those times, you get some stocks at such cheap valuations. But if you don't have cushion in your portfolio, if you don't have liquidity, you just can't do anything. You'll just be watching the stock prices, and that's it. And keep learning. I mean, there's nothing in the market like you can say that, okay, I know everything. I've been in the markets for the last 40 years and I'm still learning every day. So that's it. Thank you. And in case you have any questions, I mean, we have time, no? We have time? Yeah. So maybe I can take 2 or 3 questions if you have.
Good afternoon, sir.
Yeah, good afternoon.
I'm Suraj. I had a doubt that whether we need to learn the sales skill, because I believe that whether we are doing a job or any business, in job we are selling our time, and in business we are selling our product or services in return for the consideration. So everywhere the sales is very important. So what is your take on it?
Take on sales.
Yeah, sales skills. How do we convince people to trust and buy or take away services?
So,
if you are giving any services, how do we convince the people that we are worth giving that services?
So see, the most important thing here is how well you know about the services which you are offering. Whatever service you are offering, for example, you are an investment consultant. Okay. It all depends on how well you know the services which you are offering. So if you know it well, your confidence itself will help you sell. Because any buyer can actually make out whether the person knows what he's talking or not. Yeah. But that does not alone confirm that you'll be able to do 100% conversion. 100% conversion is just not possible. It's very, very rare. So, even if the person is not convinced once, after 3 or 4 months, after a year, somewhere they will see that what you said was right. And even if the person is not convinced, I would say be persistent. Don't give up. Because there are a number of times we have converted clients even after about 8 or 10 meetings. Things have not happened. But we have been persistent. Did I answer your question?
Yes, sir.
Yeah.
In the investment banking,
Yeah.
people usually look for the trust because
Right.
they are handing over their money to us.
Right.
So as a beginner, how do we develop that trust?
It takes time. You cannot create that trust overnight. Because initially what happens is when you're starting fresh, it is clearly some of the relationships which you already have. When I say relationships, it could be your friends, family, someone recommending you, saying that, look at him, give him some work. So that's how you start off initially. And whatever you get at that point of time, if you do it diligently, and people are happy with your services, then you don't require anyone else. That service quality itself will sell for you. You will get references. And that's how you grow.
Okay, sir. Thank you.
Yeah. Good afternoon.
So when you're buying a stock, what are the top 5 metrics that you use?
I already gave you that.
Okay.
Other than that, we look at the sort of a growth which is there consistently in the last couple of years.
Okay.
Like I said, we look for positive cash flows.
And how do you do the research about the management?
Management, see, like I said, in today's wired world, you get enough information about the management. And the only advantage which people like us have is that we are able to go and meet the management, which a normal investor may not be able to do. What we do is we also go and meet the management.
Oh.
Yeah. And for that, one of the things which we have learned is the body language. Because when a person is talking to you, you should be able to make out whether he is talking the truth or not. Because there are a couple of times, I'll tell you, I've met a management sitting with a big monitor in front of him. He's saying, I don't know what the stock price is. I don't track the stock price at all. But you look on the screen, it's on the NSE website. He's checking the price. So
And,
these things happen.
Yeah.
So I mean, one needs to, again, a management, you cannot say it's black and white. No one is completely dirty, no one is completely clean. It's all various shades of grey. So we look for managements which are slightly lighter shades of grey.
And how do you know when is the right time to exit?
You never know. You never know what is the right time to enter, what is the right time to exit. You are only doing a guesstimate, and at times your guesstimate is closer to the right time. Because even after I bought something, it's very much possible that the stock can fall. But when the stock falls, I should be able to understand and realize whether I should be buying more or not. If I bought something at 100 rupees saying it's a good price to buy, and after a month it falls to 90 or 85, if I don't know anything about the company, I'll panic. I'll say 100 ka 85 ho gaya, 85 can become 75. But if I have confidence in the company, I know what is happening, then at 85 I'll buy more. If it comes down to 75 also, I'll buy more. Assuming nothing else has changed. Okay?
Yeah.
Because after I bought the stock, if there's a huge fire in the facility and because of which the stock falls and the company doesn't have insurance, then it doesn't become a buy.
That's it.
Yeah.
Thank you.
Good evening, sir. Good
Yeah.
evening.
Yeah, good evening.
What are your thoughts about investing in small cap stocks?
See, small cap stocks are the ones which will give the alpha for the portfolio. When I say alpha for the portfolio, it will give you much better returns than the large caps, the nifty stocks. And there has to be some amount of small caps in your portfolio. But the chances of going wrong in small caps is much more. So you should know what you have bought. Just because someone has told you, ye le lo, don't buy. If it's a small cap, surely don't buy. If someone tells you, Reliance le lo, you can at least afford to, take his word for it and buy. Because you can't go so wrong in a stock like Reliance. But if it's a small stock, it can go down by 90%, 95% also. Yeah. So unless you're convinced, I'm not saying you can do detailed research. I don't know your background, so I'm just saying you may not be able to do detailed research, but at least understand the logic before buying. Yeah.
Hello, sir. I have one question.
Where?
When all your capital is stuck in one stock, how do you improve your skills apart from planning a proper exit strategy?
I can't see you. Yeah.
I said when all your capital is stuck in one stock and apart from planning a proper exit strategy, what else can you do to improve your skills in the meantime?
No, first of all, you should not have all your money in one stock. Typically, what I suggest is that you should not have more than 5% in any stock. Typically, a portfolio should not have more than 25-30 stocks. So 25-30 stocks, if you divide it equally, it works out to about 3% plus. So a typical portfolio should have exposures from 1 to 2% to a maximum of 5%. So if you're already stuck in a stock which is going down, and that's the only stock in your portfolio, then I would say that at least try and understand why it is falling. And if it is very clear that there is no hope, you could go wrong. I'm not saying everything you think can go right. But if you are decently convinced that there is not much of hope, sell. At whatever price, sell. Even if it's at a loss. Because most of us, again here psychology comes into play. People don't want to sell something at a loss. Saying that I bought it at this price, it will come back to this price. That doesn't happen in the markets. Yeah. So sell whatever you get is your fresh capital. With that fresh capital, don't make the same mistake again.
Thank you, sir.
Yeah. That's it.
Hi, sir. Hello. I wanted to know, for us beginners who've never invested, so what is the right time and how to start investing?
I didn't get your question. If you just repeat.
Sorry. I want to say that what is the right time and how to invest as a beginner in the market?
No, see, there's nothing called right time. You can start any time. When you are ready, when you think you are ready to invest. And when you are ready to invest, you should be ready to lose. If you don't have capacity to lose, do not invest. Don't borrow and invest. Okay? And by investing, if it's taking up too much of your time, in the sense, instead of studying the whole day, if you're going to keep watching the market movement, don't. Like I said, priority number one is your studies. So if you're able to invest and not spend so much of time as of now, start even as of now. Yeah. But like I said, do not put all your eggs in one basket. Again, when you talk of markets, it's not only investing. There are a lot of people who trade. Buy today, sell tomorrow. I'm not saying you should do right now. But try out various strategies. Find out what you like doing. Because in the market, I've also done a lot of trading. I've done, in those days, there was something called Badla. I've done that. I've done intraday trading. But finally, I came to long-term investments. And that too, in long-term investment, I'm doing something called contrarian investment, where I pick up stocks which are not in favor, where the waiting period is too long. So that is what suits me best. But it doesn't mean that what I'm doing will suit you well. It depends on your mental capability and your mental framework. So try some experiments, find out what works well for you, and do that. But then always maintain discipline. Discipline is most important in the market.
Okay, sir. Thank you. Have
Right.
a great day.
Fine. So thanks all of you for your patience here. Thanks.
Thank you, sir. As Robert Kiyosaki, the author of the book Rich Dad, Poor Dad, aptly said, the rich don't work for money, they make money work for them. This session has truly broadened our perspective on how global capital markets can empower us to just do that by deepening our understanding of the wealth of opportunities that lie beyond our domestic borders. My sincere thanks to Mr. Ambareesh Baliga for guiding us through the intricate yet rewarding world of global investing. I now request CA Bantwal Nitin Baliga to present the token of gratitude to our speaker.